Right, I've often heard, as we've been talking about and teaching financial advisors, financial professionals about Bitcoin and crypto and DeFi for several years. Heard several people, especially from kind of TradFi that are coming over to crypto. Really what you have to tell financial advisors is just the absolute basics. How do you put this in a portfolio quickly and easily? But what we do is we pretty much go into some depth about the technology, about first the why Bitcoin was created, how it works, in depth about the technology, about how blockchain technology works, a little bit about cryptography, definitely about wallets and custody. We go into Ethereum, we go into smart contracts, why Ethereum started, why we need smart contracts, why we need stable coins, why real world assets. We talk a lot about the why, and we talk very much about the technicals, which is probably way too detailed for some people. But here's why I think it's so important to understand. First, the why. If you don't understand why Bitcoin was created, you don't understand why smart contracts were created and why the whole systems continue to move forward, then it's going to be really difficult to determine where you think the value is for something like Bitcoin or the value is for something like ETH if you don't think that there's a reason for it to exist, if you don't agree that there's a reason for it to exist. And so first we go into the why they exist. And why they exist is not to send money really fast. There are plenty of other reasons. Then we go into the technicals. Here's how a block gets processed. Here's why it's called a blockchain. Cryptographic perspective, here's a little bit about how wallets and custody work. And we do this because this technology is likely to change very much of the financial system. And for financial advisors to understand a bit about how that technology works, I think is going to be really important. Another reason why we go into the how it works, we go into kind of technical detail, is because we know that, especially with Bitcoin, with ETH, with some other crypto assets, the ideas around value are changing. The ideas around what drives the value for something that I invest in and what drives the value for something I use are changing. And as a financial advisor, you need to be able to understand the technicals behind it so you get why fundamentals, why the value is changing, where I see different values. Plus, you need to be able to do your due diligence. You need to be able to understand why one custodian might be better than another. And you need to probably be able to understand why your clients might want to custody their own assets and how they might custody their own assets and what that even means. You have to understand what a protocol is on something like Ethereum or Solana, but before that, you have to understand what smart contracts are. So we always had this slippery slope of moving backwards and go, okay, we have to explain the previous thing and the previous thing and the previous thing. And next thing you know, we've gone all the way back to the beginning of why Bitcoin exists and how it works. And you can't start necessarily with, here's what a Bitcoin ETF should do and here's why it should have value, because if people don't understand that there's only a block processed every 10 minutes and people don't understand why there will only ever be 21 million Bitcoin, then much of the other arguments don't make a lot of sense. If you don't understand the why and the how, then the rest of it doesn't make sense. And because this is newer technology, a newer evolution of technology, because we have to look at valuation a little bit different, because this technology is going to give us benefits that we didn't have, give us benefits like immutability and transparency. It's going to give us the idea. It's going to change the way custody works. If you don't understand how all that happens, you don't understand why it exists, then it's going to be really hard to go, yeah, I'm going to put my clients into a Bitcoin spot ETF or maybe an ETH spot ETF when it comes out, because you're not going to understand where the value comes from. The value in so many other investments that we've had in the past is pretty apparent when you start talking about the ideas of sales, of revenue minus costs. But remember, it wasn't all that apparent in the early days of the internet. We didn't understand what eyeballs went. We didn't understand where the value was going to come from in something like Google, because people were just searching and Google wasn't charging you to search. We didn't realize how valuable data was. We didn't realize how valuable things like advertising would be and how targeted we could make it. And therefore, again, in my mind, understanding the technology here helps with valuation. It helps with adoption and use cases. It helps with due diligence, and it helps with opening your mind to what is possible from a valuation, from a currency perspective, from a value of assets perspective. So again, we go into a lot of detail on why Bitcoin started, on why Ethereum started, on why some of the other L1s start. We go into detail about custody, about how chains work, about cryptography a little bit, not too much detail on cryptography, but we feel like we have to do that at this point because that is how financial advisors are going to start thinking about valuation, about custody, and about whatever else is going to change in our world, in the financial services world, due to blockchain technology.